NVIDIA stock NVDA is up around 80%, 80% year to date 2023, a very strong showing. This is partly due to the excitement around the artificial intelligence boom and what is expected to be surging demand for NVIDIA's chips in the years ahead. And you can even ask OpenAI, one of the pioneers with artificial intelligence, how could NVIDIA benefit here? And they go, look, as AI applications and research has grown exponentially, so is the demand for computational power necessary to train and deploy these AI models, talking about the need for GPUs, or the graphic processing units that NVIDIA sells, for data centers and cloud services, machine learning and deep learning, so training the models, and autonomous vehicles. These are all things that NVIDIA is selling into. And you can see this with their results. And this is part of the reason why NVIDIA has become one of the Wall Street darlings over the last few years, where you can see compute and networking revenue, one of their key business drivers, has gone from around $3.5 billion in revenue just a few years ago to around $15 billion. So that's 4.5 times growth. This is partly due to acquisitions, but also due to pure organic growth. So it's a combination, and it's just surging demand in the cloud. Now, the core cloud providers, these hyperscalers, the Google, the Amazon, Microsoft Azure, they're looking at this and they recognize they're buying a lot more processors than they have in the past. And they're thinking, hey, could we tweak our own? And so you see Google, coming out with their own iterations of their own chips, the tensor processing units that they claim are a bit faster, 1.2 to 1.7 times faster, 1.3 to 1.9 times using less power than NVIDIA's chips. So it is, you will see some competitive pressures from some of their customers saying, hey, maybe we could do this better ourselves. But we'll see how this plays out, especially because NVIDIA, they're not just sitting back. They're not resting on their laurels. They continue to invest in the business, coming out with new and exciting products. For example, just recently, they talked about the Clara Holoscan, which is a hybrid computing platform for medical devices, combining hardware systems for low latency sensors and network connectivity. So you're talking about connecting surgical video, ultrasound, medical imaging, combining it with, so you have all this data coming in, combining it with artificial intelligence. This is one of the types of platforms, types of hardware that you're going to need to see the breakthroughs with artificial intelligence in the medical industry in the years ahead. So one of the key takeaways that I think you should get from this video is that NVIDIA is clearly powering the future, and it is a bright future. It's an exciting future when you think about what artificial intelligence can do and what NVIDIA is empowering. So from that perspective, I certainly want to align myself with it, with sort of saying, hey, you are empowering the future. But then you also have to understand, well, what do the fundamentals look like for this business? Are they matching the promise and the excitement that we're seeing? So we're going to talk about that, as well as always, if this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. If you enjoy educational investment videos, please make a point of hitting that thumbs up, hit that subscribe button. So as we look at, what's going on with NVIDIA, they called this out. Here it is, Jensen Huang from the last quarter. He's calling this out like, look, this is an absolutely huge opportunity. And I agree with him. He talks about large language models like what you have with OpenAI's ChatGPT. They're called large because they are quite large. And he talks about accelerating and advanced AI processing and how it has increased by 1,000,000x over the last decade. That's accelerating AI processing. And he talks about how Moore's law in its best days would have only delivered 100x in a decade. So they have enabled with their investments in their chips, they've enabled large language model processing 1,000,000 times faster over the past decade. That's a big, big deal. And talking about what used to take a couple of months in the beginning is now taking just about 10 days. Now, why is this such a huge opportunity? Because the large language model that you have with OpenAI, that's just sort of a broad model. You're going to have a lot of models that are going to require data that OpenAI couldn't get, that's going to be exclusive to companies that are behind the wall. And there's so many different angles here. They talk about, okay, well, you have different countries, you have different cultures, you have different fields, different domains, whether it's biology or physics. You haven't seen the future GPT model that is deeply embedded and deeply working with, let's say, a lot of deep physics or a lot of deep biology, and having some of the best, sharpest minds say, hey, let's make sure this model is tweaked and refined and fine-tuned based on this data and these inputs and these, papers. What does that mean And so I think there's going to be a lot of fine tuning with ChatGPT and other large language models for particular sectors. And he calls out like, look, companies around the world have their own proprietary data. The most valuable data in the world are proprietary. It belongs inside the company. It will never leave the company. So you're going to have a lot of custom models built not only for specific verticals for different areas like the hard sciences, like I just called out, but also individual companies that don't want their data to get, broadly read by, OpenAI. Say, okay, well, it needs to be trained just on what we have, and we're not going to let it out in the world. So that way it really is sort of this black box based on the data we have. That will be very powerful, but it's going to take time, and it's going to require a lot of demand for NVIDIA's GPUs and their processors. Now, you need to combine this excitement, which I think is very real, with the actual fundamentals. What does their actual performance look like? What's actually driving NVIDIA's results? And so they break it up into two different ways. You see compute and networking and graphics. So that's two different segments, or they show it by revenue by market platform. And so either way, how you slice it and dice it, in the last quarter, it was pretty weak. Where compute and networking, that was what I just showed as being up 4.5 times in about 3 years. That was up 14% in the most recent quarter. So you might say that, well, that's quite strong. But graphics, which is, the larger part of their business, that was actually, or roughly the same, it depends on which quarter you're looking at. That was actually down around half. And you could look at, once again, the market platforms, data center up around 11%, but gaming down 46%, professional visualization down 65%. Automotive is up, 100% plus, but it's a very small base. You're talking about, a couple hundred, $1 million versus, where you are with the market of, 3.6 billion for data center, or gaming of 1.8 billion. So you can see, and this is the latest period right here, the most recent quarter. But broadly looking at weak results, even though there's still strength in data center, their total revenue was down from what you're looking at of 7.6 billion to 6 billion year over year, about a 20% drop. And that 20% drop is made even worse by the fact that they have a lot of fixed costs in this business. Just because you have, let's say, underlying weakness in certain, markets, doesn't mean that you're automatically going to let go of a lot of the scientists, the researchers. You still have to keep the factories going. Well, in this case, they don't actually use the factories because they're using Taiwan Semiconductor to manufacture the chips. But you'd still have a lot of fixed costs with your researchers, your employee base. And so looking at this, if you have let's say, 20% drop in revenue, your drop in operating profit can be much, much worse. And so that's what we've seen, down around 60% in the most recent quarter. If you adjust for stock-based compensation, down closer to 40%. Either way, it's a significant drop in operating profit, which doesn't really jive with what we've seen with NVIDIA stock so far. So, okay, so where does NVIDIA go from here? First, quick plug, I just started buying a stock that I think has over 300% upside that I called out to my subscribers at unrivaledinvesting.com. I also expect to raise prices soon, so now's the time to act if you'd like to lock in a favorable rate at unrivaledinvesting.com and take charge of your investment journey. I also offer educational courses for those that are interested in learning how to value stocks and read financial statements as well. That's at unrivaledinvesting.com. In full disclosure, this is not financial advice. So looking at NVIDIA, where they are right now, well, they did provide, guidance as of the most recent quarter. And keep in mind, this is just a few weeks ago, saying, yeah, despite all this excitement, despite all this promise, this next quarter, we're still expecting around a 20% decline. And given, the high fixed cost nature of this business, once again, you're not able to necessarily, change your employee base with how revenue changes. You could see a similar change, potentially even worse, with profitability. We'll see how that sort of shapes up. That's an important point to understand. So you're not seeing dramatic strength in the results, at least in the immediate term. Maybe later on this year, we'll see. But I'd argue, looking at NVIDIA's valuation, this is their past decade price to sales multiple. Early on, this was at 2 to 3 times sales. Now it's near a record of 24 times sales, almost at the peak of where it was previously, closer to 35 times sales. The reason why this is so particularly alarming when I look at this is I'm thinking that, one, the higher the valuation, the faster you have to grow in the future in order to just meet expectations. Because when you see a chart like that, that shows you the valuation, that means that's the expectations that's getting built into it. That means it's going to be increasingly difficult to meet those expectations, in my opinion, even if the future is very promising, which I believe it is. But I think you're looking at a business that still has, graphics, professional gaming, graphic designers. That market, that hasn't gone to zero. That's a part of their business. I don't think that's necessarily going to see the huge growth that AI could have. But this isn't, looking at a business that's going to be able to grow, let's say 50% per year going forward. At least I don't think so. I think it's important to say, okay, the hyper growth, the bigger you are, the harder it is for you to grow at hyper speeds. And so let's talk about, some of these elements, in a second, thinking about their valuation in particular. But this does make me think that NVIDIA over the next year could perform terribly. That's what it makes me think when I look at that chart. When I see, okay, you're near prior peak valuation, and by the way, the fundamentals that you're calling out aren't that compelling. Most recently, you're talking about around 20% decline in revenue. When you look at their prior peak earnings, so that's fiscal 22, not their most recent fiscal 2023. Fiscal 2022, they're around $10 billion in earnings. So most recently, as their revenue sort of plateaued and they kept hiring, so you can see revenue went from 26.9 billion to 26.97 billion, but they kept on hiring. They did have some acquisition termination costs, 1.3 billion, but still broadly, they were hiring, continuing to expand their research and development team, continuing to expand their sales and general and admin costs. You look at this and their profits were much, much lower. So even though sales were effectively flat, marginally higher, their profitability was closer to 4 or 5 billion, if you add back, one-time costs. So a huge drop from where it was in fiscal 2022. But even if you say, oh, no, this was an anomaly, you got to focus on 2022, it's still trading at a really very rich valuation of 67 times earnings, prior peak earnings, by the way. If you use actual trailing figures, the figures looks absurd. So how should you think about NVIDIA going forward? I do a very rough framework, thinking about it, currently around $656 billion valuation. This is a hypothetical valuation framework. Of course, stock price can go way higher, way lower, but I want to look at what would it take to have a great return from here. So I'm assuming 30 to 35% operating profit margins. They're not there right now. Their margins are much lower right now because they've hired and their sales haven't, kept up. Their sales have been weaker. But let's say it gets back to this level. I'm assuming this year, management's guiding to a sizable drop. Maybe it's actually only shakes out to be 0% this next year. Maybe another flat year. We'll see. This could be very aggressive, given what they've already targeted for their first quarter. We'll see how that plays out. Then let's look at the next, 4 years, because I always try to have a long-term framework, all in about 5 years. Thinking, okay, this AI opportunity is clearly real and clearly NVIDIA should benefit from this. So maybe you have 15% annualized growth. Maybe you have 25% annualized growth beyond fiscal 24, so this upcoming year. Assuming this best case scenario where you get back to 35% profit margins, which you're not at, you get to 25% annualized growth, which you're not at, and you get 30 times earnings multiple, then the stock is flat over the next 5 years. If you do not deliver on any of these variables, then you could be in a world of pain in NVIDIA stock over the next 5 years. And that's why it wouldn't surprise me to see this as one of the biggest losers in the next year or two. Because if you just have a small change in perception on the valuation, or you have a small change in perception on what that long-term growth rate looks like in the years ahead, instead of, let's say, 25%, people say, you know what? Maybe it's really 15%. Maybe it's really 20%. Maybe it's appropriate to use a 20 times multiple. Then you could see stock price down 50% easily from here. So I look at this and I'm thinking, I'm really excited about what NVIDIA is investing in, founder-led business, profitable, long-term growth potential. But when I invest, I also want to see things that have fundamentals and valuation align and have a promising, picture. Because you always have to have, you consider 3 components that drive returns: fundamentals, valuation, and the cash flow to shareholders. On this perspective, the recent fundamentals are weak. Maybe it gets better in the future. The valuation is just awful. And the cash flow, it's not like they're returning huge amounts of cash flow to shareholders. They're reinvesting in the business for the most part. So when I'm thinking about my own personal investment journey, I want the exact opposite. I want to see strong growth. My most recent letter, I'm calling out a company growing 40% plus. I want to see valuation where it's trading at a low teens multiple. And I want to see cash flow that can get returned to shareholders. Those are the types of things that I want to see. This is just, even though I think NVIDIA is aligned with a very exciting future. And I'm excited. I'm grateful that they're going to be building cool stuff that I'm sure I will indirectly benefit from. I'm just not sure that this is appropriate for my own personal investment journey at this point. If you have a different take or think I'm missing a big angle on why they can grow, let's say faster than 25% annualized in the years ahead, I definitely want to hear it in the comments below, because I'm excited about their potential, but I also want to temper it with, hey, what's reality and what does valuation look like? If this video has been helpful for you, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching Unrivaled Investing.